During the housing and financial crisis of 2008, Dr. Michael Burry became famous for winning millions from a huge short against subprime mortgages. Now, more than a decade later, he is betting against Elon Musk and Tesla. So today, we will be looking at his reasoning for why Tesla might go bankrupt. But first, please accept my warmest greetings if this is your first visit to our Smart Stocks Academy channel. To be the first to know when a new video like this is released, hit the like button, subscribe, and click the notification bell next to it to be the first to know when we have a new video. And now let's get to it. Some of you may already be aware, but the 13F filing was only recently released. This is where all of the major investors reveal their holdings to the general public. Burry dropped the bombshell against Tesla here. His 13F shows that he has purchased a large number of PUTs against Tesla. His PUT is valued about $500 million, making it not just his largest stake, but also roughly 40% of his total portfolio. Regular Burry followers were probably unsurprised by the PUT, as Burry has previously stated that he is short Tesla, but 40% of Burry's total portfolio in PUTs against Tesla surprised a lot of people. For those unfamiliar with PUTs, it is a form of option in which investors profit when stock prices fall, which is exactly what Burry predicts will happen with Tesla's stock prices. Burry's PUTs allow him the right to sell those $534 million shares at a specific strike price before a certain expiration date at the end of March. Burry can sell his shares for a profit if Tesla's stock price falls below the strike price before the options expire. Furthermore, since Burry previously stated that he was short Tesla, this could still be the case right now. One of the most significant disadvantages of the 13F filings is that it does not require investors to report their short positions. Thus, it is likely that Burry has even more money invested in Tesla through shorts. Some may argue that a lot of insane individuals have been shorting Tesla for a long time, and that practically all of them have been proven incorrect by Elon Musk and Tesla's stock price, but Michael Burry is different. He rarely makes large bets or forecasts, but when he does, he is generally correct. I'm sure most of you watching this video is familiar with Burry's infamous Big Short from 2008, in which he was actually ahead of the curve in predicting that the US housing market was in a bubble that would burst when it did. Furthermore, back in March of 2020, when the pandemic was just getting started, he projected that once the virus was ended and the economy reopened, we would see large rises in inflation. And according to the data from this month, inflation has arrived. Consumer prices increased by 4.2% year over year, the most in 11 years. As a result, based on his track record, I believe it is prudent to pay attention. You don't have to agree or disagree, but it is always interesting to hear someone's reasoning for placing such a large wager. But how do we figure out why he decided to bet against Tesla? Sadly, the SEC does not force management to explain their opinions, despite the fact that this would be extremely beneficial. Remember how he made it public that he is short on Tesla? Well, he made the announcement via Twitter. He offered us his opinions. So let's dive into those tweets, and then I'll give you more perspective on the tweets. One thing we might deduce from this is that Burry does not necessarily believe Tesla is a horrible company. He merely thinks the stock is ridiculously expensive for a company that hasn't made any meaningful earnings in a long time. Let me explain what I mean by meaningful profits before you go down the comments area to call me a moron and point out Tesla does make money. Tesla sold $518 million in regulatory credits to automakers who needed to offset their carbon footprint in the first quarter of 2021. Tesla's $270 million in net income in the fourth quarter of 2020 was made possible by the sale of $401 million in regulatory credits to other cars. Therefore, Tesla's profitability may be jeopardized if other automakers become more self-reliant in offsetting their carbon impact. When you combine this information with Burry's inflation warning from our previous video, you can begin to see why Burry believes Tesla is overvalued. If you haven't seen the video yet, I strongly advise you to do so, but I'll give you a quick review anyhow. Burry has predicted that hyperinflation is on the way, and that the only companies that shine during hyperinflation are the profitable ones. With Tesla's high valuation and little profitability, it is easy to see why Burry thinks the stock would fall, but it hasn't. Burry launched his short position on December 2nd, 2020 at a price of $570 for Tesla stock. Tesla stock prices have subsequently soared to a high of $900 in late January, but this hasn't deterred Burry. Tesla is now trading at $570 as of May 17, 2021. And we can't be sure if Burry's puts are in the green yet because we don't know the strike price. Burry has also slammed Bitcoin and other cryptocurrencies in which Tesla was involved at that time, but Tesla has subsequently stopped taking Bitcoin as payment. The value of cryptocurrencies is expected to rise as younger people abandon traditional methods of making financial transactions, such as using paper money and writing checks on a regular basis. The latter makes millennial hands and heads shiver. COVID also introduced the globe to the potential of virtual viability, which includes cryptocurrencies. If the dollar ever falls out of favor, it provides an alternate mechanism of storing transactional value. Given how the world is sluggish to adapt to many changes, we don't know if Bitcoin is here to stay and eventually thrive, or if it's just the next craze. Because traders cannot meet the margin requirements of the leveraged positions, exchanges force traders to liquidate or close their positions when Bitcoin's prices falls below the liquidation price of their positions. This tweet's riddle can be solved without the use of a magic 8-ball. Because fiat money is supported by the government, it remains its worth. The government establishes the types of currency that we use to exchange goods and services in our daily lives. As you might expect, many members of the government and their cronies are extremely wealthy, their personal wealth equaling net worth. Institutions that are unable to adjust to cryptocurrencies competing with the good old dollar risk collapsing. And some of them are major actors in the financial world and in life in general. A blow-off chart depicts a pattern in which an asset price and trading volume rise sharply, followed by a sharp drop in price. Burry's views on Dogecoin are similar to his views on Bitcoin and, most likely, all cryptocurrencies. I hope this sheds some light on why Burry chose to bet against Tesla. And with that, today's video comes to a close. To express your love and support for this video, click the like button if you haven't already. Also, don't forget to subscribe to the channel and click the notification bell next to it to be the first to know when a new video is posted. Thank you for taking the time to watch, and we hope you enjoyed yourself and learned something. We look forward to seeing you again soon.